Hi, my name is Eddie Hood. I am one of the founding partners here at Ignite Spot Outsourced Accounting. Our goal in this video is to talk about the fifth of 7 different financial traps that we feel many businesses suffer from and are often the cause of why so many companies go out of business. Our goal is to make sure that does not happen to you, so we're excited to go over this. If you didn't know by now, Ignite Spot is actually an acronym. So each of these letters in the name Ignite stand for something different. Today we're talking about the letter T, which stands for team. We want to look at your team's productivity, how much you can spend on your team so that you don't overhire or underhire. So trap number 5 is really overhiring or underhiring for your business needs. And the question we always get from our clients is, can I hire right now? They're feeling a pinch or a squeeze and they want extra help, until they come to us and say, do we have enough money for that? And quite often that can be a difficult question to answer, but with this tool it's actually pretty easy. So here's what you do. On the right hand side there is a table that we use. Let me go over and highlight everything so you can see it. And the first column is the employee's name. This will have employee 1 through 25. You can add as many rows as you want, of course, but you just replace each of these with the name of a person in your company. So in this example, Bob Smith -CEO. You might add Mary Jane, account representative or whatever. You just add everybody in your system here, and then you add how much you pay them per month. This doesn't include taxes or anything. This is just our flat wage per month. And like all of the other tools in the Ignite Spot coaching tool, we just want to fill out the blue cells, and everything else will be calculated for you. So for example, Bob Smith makes $83.33 a month, and then it tells you his hourly rate by dividing this by 160 hours a month. So he's making about $52 an hour. Annualized, he's just under $100,000 a year, which is nice to know. And then what you do is you add any additional benefits that you are offering to this employee. So healthcare, dental, vision, and anything else. Then what it does is it takes and estimates what your employer taxes are going to be for this person. So it's taking the monthly wage and it's multiplying it by about 11%. We're being a little worst case here, trying to give you the higher end of the taxes. But you can plan on paying about $917 as of right now as tax rates for a person that makes this much per month. Then what this does is this adds everything up so that you can see the full burden cost of this employee. It's not $8,300. In fact, this employee costs you $9,600, so that's nice to know. Once you list it out for all of your employees, it's going to give you some totals. Your total for your flat monthly wage that you're paying out, the total for each of your benefits, the total you should expect to pay monthly for your employer taxes, as well as the full burden cost for your entire staff across your whole organization. Now here's the fun part. Over here is the labor budget analysis tool we've built. All you do is you put in your monthly revenue. What do you make on average per month in your business? Let's call it $70,000 roughly. Okay. Everything Ignite Spot does is based on one of our 3 missions. Our mission in life is to help every business in America get out of debt. Number 2, it's to make sure that every company is profitable by at least 10%. And the third one is to show you how much we care about you in all that we do. So this tool immediately takes out 10%. This is an item that you can change. In fact, I'm going to make this blue because this is something that you can change if you want to. But you always want to make it 10%. And what that does is it takes 10% automatically out of your revenue and says you don't get to spend that on staff. Okay, you need to set that aside for business growth or payments to yourself as the owner, whatever it's going to be. Okay, but that's money you're going to put back into the business, 10%. Now you can change this to 15% if you want, and of course that figure will change, but we'll stick with 10% for now. Then what you do is you add how much you're spending per month on your cost of goods sold. And remember that this is the cost of your supplies and your materials. This does not include direct labor. And I've said this in several of the videos that have gone along with this coaching tool, and here's why. This is where it all comes down to. We are trying to figure out what kind of budget you can spend on your staff across the entire company. So we're taking all of the costs out and we're backing into a budget for you for your labor. Okay, so if we take out the cost of supply and materials, we take out what you spend on your facilities, on your marketing each month, on your training for your staff each month, and then on the rest of your overhead. Let's say for this business, those are the monthly costs on average. What it does is this figure right here is a calculation, and if I click on it, it's taking your total revenue and it's taking out all of these negative numbers, and it's giving you a remaining budget of $50,000 that you can spend on your staff. Now, this right here is pulling from the table. Currently, you're spending $46,588. Where that comes from is down here. That's the full burden cost of all of your staff. So in this case, this business actually has a balance remaining of $3,669 that they can spend on future staff, or they can use that money for raises for their employees currently, or they can just operate at an excess profit, which really they're closer to about 15% right now. Whoop, sorry, that didn't work out so well. 15%. So if I put in 15% there, we're setting aside extra for the business, and we're still green. Now you saw when I made that mistake there that this thing turned red because I put in a weird number up here. Well, let's say that you actually, let's go back to 10%, and let's say that you are, paying employee 6. Let's call this John Smith. Let's say instead of $2,500 a month, you're paying him $10,000 a month because he demanded that. Well, down here in your balance remaining, you're now upside down on your labor budget by $4,656. This is one of the main reasons why businesses go out of business, because they don't realize how much they're actually spending on their staff. And so when you work with IgniteSpot, one of our main goals is to nail this down for you and let you know that you have a deficit here. And if that's the case, you're going to need to cut back on some wages here, maybe let somebody go, because you've overhired is what you've done in this case. You're either overpaying somebody or you've got too many people on staff for the amount of revenue that they're generating. Now, sure, I can turn this to zero, essentially breaking even, and you're positive. And that's how most businesses think. Well, we're breaking even, so I don't want to fire anybody because we're all friends. That's really, really valiant, but the problem is that you can't run at break even. I mean, you're literally walking on a fine line. You've got to give yourself a margin of success. Make it 10%, and then get your staff in line with this budget so that it turns green. So if I get him down to, say, let's say we go back to John Smith and we let him know, hey, we're not generating as much money as we need to do right now, so I'm going to have to take you down to about $6,000. Now let's actually go $5,500. That gets us in balance with where we need to be, and you're still getting paid fairly well. And once we get up to a higher revenue figure, I'm happy to take you back to $10,000. That's how you plan for your labor. Okay, so when you're working with IgniteSpot, we'll go to this table with you every time you ask the question, can I hire? And we'll go over this with you on our weekly call with you, or once a month, however you want to do that. So that's it. That's how you use the T in IgniteSpot, and we look forward to helping you out. Thanks for watching.